Hey, welcome to the Loonie Tree channel. If you're with us today, you're probably like a lot of Canadians who are wrestling with the question of how to invest with a TFSA or an RRSP. And if I have to choose one or the other, which of those would I go with? It's a great question, and the answer might be a little bit easier than you think. Let's get to work.
Okay, so imagine it's the end of the year and you're getting a big bonus from your boss for all the hard work you've been putting in. Now, bonuses can be a little unpredictable, and since we usually don't know when we can expect the bonus before we get it and how much they're going to be for, many people choose when they get a bonus to put the majority of it towards their long-term savings.
Now this is where the decision between TFSA and RRSP comes in. But before we get to our golden rule tip, a quick review of what a TFSA and RRSP are. So the basics. Both the TFSA and an RRSP are accounts you can put investments in. Both accounts also reduce the tax that you pay the government. What makes these two very different is when that tax saving takes place. It's this difference that makes your decision of where to put your money first so important. For a TFSA, there is no savings when you put the money in. But whenever you take any amount of that money back out, you'll pay no tax, even if that original money has doubled or tripled in the meantime. For the RRSP, on the other hand, the money that you put in gets subtracted from the income the government will tax you for that year. What does that mean? Well, essentially, you save or keep the tax that you would have had to pay on that income up front, versus the TFSA, where you save the tax at the back when you take it out. Remember, TFSAs and RRSPs are like buckets for you to put investments into. There is a max amount that you can hold in either of these buckets, but the government increases that size every year. If you don't use your bucket to its capacity, don't worry, it still keeps growing. So you never lose out on that contribution room, or the ability to use it and fill it up when it suits you best. Okay, so let's get to the golden rule. How do I choose between these two accounts? Well, it really comes down to one question. Is my income going to increase in the future? If the answer is yes, invest in your TFSA first. If no, invest in your RRSP first. Now that doesn't mean that you can't do both, but like we talked about earlier, the money you can put in either account has a cap. So it's possible, if you're an amazing saver, you might hit that cap. And that's a good thing. If this happens to you, just start investing or saving in that other account. Seems easy to remember, right? If my income is growing and my TFSA is not full, I need to focus on filling it up. Now let me show you why. In Canada, we have what is called a marginal tax rate. That means that as your income increases, you also start to pay a higher tax rate on that additional income. So consider this example. You're at your first job earning $30,000 a year and paying about 20% in income tax. Fast forward to a few years later, you've got a promotion or maybe you got a few raises, and now you're at over $50,000 a year and paying 30% income tax on that additional income. Looking back on what we just talked about, where would we save and invest first, a TFSA or an RRSP? Well, expecting our income will grow from our first job, it makes sense to use the TFSA first, as I would rather pay the 20% tax and let the money I put in my TFSA account grow tax-free. In the future, when I'm paying 30% income tax, I might want to move to an RRSP. So in that case, I would like to save my RRSP bucket, or in other words, my RRSP contribution room, for that. Remember, when talking about long-term savings, putting money in either of these accounts is always going to be better than spending it. So if you got that far, that's a big part of the battle. Now we're just talking about optimizing. And when you're optimizing for these two decisions, consider this. If you're paying less tax now than you expect to down the road, let's use that to our advantage. Use your TFSA to save now and pay lower tax, and then none when you withdraw the money down the road. If you're paying higher tax now than when you're going to withdraw the money, use the RRSP and pay the lower tax rate when you eventually take the money out. Thanks for watching. Remember, there are always exceptions to any rules, but this approach works, and more important, it's easy. Saving is always better than doing nothing. And this gives you a platform to jump off if you want to get more advanced. Once you're comfortable or want to learn more, check out some of the links to our other videos where we go into more depth on some of these topics. Bye for now.